What if I told you that the most valuable company on planet Earth, a company worth $3.8 trillion as of today, was 90 days away from shutting down forever? What if I told you that this company had to borrow $150 million from its biggest rival, yes, its competitor, just to make payroll? And what if that same company, in the span of just 25 years, went on to become the most recognizable brand in human history, selling over 2 billion devices, running the most profitable software ecosystem ever created, and minting more millionaires through its stock than almost any company that has ever existed? My name is Mano. Welcome to Mano Invest, and today we are telling the full, unfiltered, jaw-dropping story of Apple Incorporated, the greatest corporate comeback in history. We are going from the garage to the boardroom to near bankruptcy, to a Steve Jobs resurrection, to iPhones, to the App Store, to Tim Cook's empire, and all the real financial numbers along the way. Buckle up, this is going to be one incredible ride. It is April 1st, 1976, April Fool's Day, and 3 young men are about to change the world, although nobody on Earth believed that yet. Steve Jobs was 21 years old, Steve Wozniak was 25, and a man named Ronald Wayne was 41. They incorporated Apple Computer Company in a garage in Altos, California. Ronald Wayne drew the first Apple logo, a complicated sketch of Isaac Newton under an apple tree, and owned 10% of the company. Now here is the first piece of financial data that will make your jaw drop. Ronald Wayne sold his 10% stake back to Jobs and Wozniak just 12 days later for $800. $800! As of March 2026, that 10% stake would be worth approximately $380 billion. That is one of the most expensive decisions any human being has ever made. Wozniak hand-built the Apple I, a bare circuit board, and they sold it to a local computer store called Byte Shop for $666.66 per unit. They sold 200 units and generated about $130,000 in their first year of business. Not bad for a garage operation. Then came the Apple II in 1977. This was the real breakthrough. Color graphics, a proper keyboard, expandable memory slots, it was unlike anything the world had seen. The Apple II was in production for 16 years and sold over 5 million units. It brought in $300 million in revenue by 1981 alone. Apple was becoming a real company. In December 1980, Apple went public. The IPO price was $22 per share. On the very first day of trading, the stock hit $29. Apple raised $96 million, the largest IPO since Ford Motor Company went public back in 1956. Overnight, Steve Jobs became a multi-millionaire at 25 years old. 300 employees became instant millionaires. Silicon Valley had a new star. On January 22, 1984, Apple aired what is still considered the greatest television commercial ever made. It ran only once, during the Super Bowl, and cost $1.5 million to produce. Directed by Ridley Scott, it showed a dystopian world controlled by a faceless corporation and a lone woman running in and smashing it all with a hammer. The message was clear. Apple's Macintosh was going to set you free from the IBM-controlled computing world. The Macintosh launched 2 days later at $2,495, roughly $7,000 in today's money. It introduced the world to a graphical user interface, no more typing commands. You pointed, you clicked, you dragged. It was revolutionary, but it was also slow, it was underpowered, and it was expensive. Sales were strong at first, 70,000 units in just 74 days, but then they stalled badly. What happened next is one of the most dramatic stories in Silicon Valley history. Steve Jobs was becoming increasingly difficult to work with, brilliant but volatile, inspiring but brutal. In 1983, Apple had brought in John Sculley from Pepsi as CEO because Jobs convinced him to leave with the famous line, "Do you want to sell sugared water for the rest of your life, or do you want to come with me and change the world?" By 1985, Sculley turned that same board against Steve. Steve Jobs was fired from the company he had co-founded. He was 30 years old. Jobs left, started a new company called Next, and Apple stumbled badly without him. Between 1985 and 1997, Apple launched product after product that failed. The Newton Personal Digital Assistant, a disaster. The Macintosh Portable, too heavy, too expensive. They went through 5 CEOs in 12 years. Revenue went from $11 billion in 1995 to $7 billion in 1997. The company was losing money every quarter. By mid-1997, Apple had just 90 days of cash reserves left. 90 days! The board was preparing to file for bankruptcy. Analysts were openly asking whether Apple would simply cease to exist. The stock, which had been at almost $30 in 1991, had collapsed to below $4. Apple was worth less than $1 billion. The press was merciless. Businessweek ran a cover story asking simply, "The fall of an American icon." And then, the most unlikely rescue in corporate history. In December 1996, Apple purchased Steve Jobs' company Next for $427 million. Jobs came back as an advisor. By September 1997, with the company teetering at the edge, the board asked Jobs to become interim CEO. He took the job for a salary of $1 per year. $1. Jobs made exactly 3 moves in his first 100 days that saved Apple. First, he called Bill Gates. Yes, that Bill Gates, the enemy. Jobs convinced Microsoft to invest $150 million in Apple and commit to developing Microsoft Office for Mac for the next 5 years. Apple stock jumped 33% in a single day when that deal was announced. Second, Jobs took Apple's product line, which had ballooned to 350 different products, and cut it down to just 10. 10 products. He was ruthless. He killed entire divisions, laid off thousands of employees, and refocused the company on doing a few things exceptionally well rather than many things poorly. Third, he launched the iMac in August 1998, a beautiful, translucent color computer that looked nothing like that had ever been made before. It came in 5 colors: Bondi Blue, Strawberry, Lime, Tangerine, and Grape. It was fun, it was different, it was undeniably Apple. The iMac sold 278,000 units in its first 6 weeks alone. It was the fastest-selling Mac in history at the time. Apple returned to profitability in its very first quarter with Jobs back in charge, posting a profit of $45 million after years of losses. By 1999, Apple stock had recovered to over $40. By 2000, Jobs officially dropped the interim from his title and became full-time CEO. The comeback was real, but the best was yet to come. October 23, 2001, San Francisco, California, the Macworld Conference. Steve Jobs walks onto the stage with a mischievous smile and pulls something out of his pocket. "1,000 songs in your pocket," he says. The iPod. Priced at $399, it was considered outrageously expensive for an MP3 player. Critics laughed. "No wireless, less space than a Nomad? Lame," wrote one reviewer. But they were completely wrong. Apple sold 600,000 iPods in 2002, then 2 million in 2003, then 10 million in 2004, then 42 million in 2006. iPod generated over $7 billion in revenue in 2006 alone, representing almost half of Apple's total revenue that year. It was not just a product, it was a cultural phenomenon. But Jobs wasn't just selling hardware, he was selling an ecosystem. In April 2003, Apple launched the iTunes Music Store. For the first time, you could legally buy a single song for 99 cents. In its first 18 hours, iTunes sold 1 million songs. In its first year, 230 million songs. The music industry, which had been devastated by illegal downloading platforms like Napster, was rescued by Apple. Apple took 30% of every sale. That 30% number, that commission on a digital marketplace, would become the foundation of one of the most profitable business models in history. By the end of 2006, Apple stock had risen from under $4 in 1997 to over $80. Market cap had grown from below $1 billion to over $70 billion. The comeback was not just complete, Apple was becoming something bigger, something that nobody had yet fully understood. January 9th, 2007, San Francisco, California, the Macworld Conference. Steve Jobs walks onto the stage with a mischievous smile and says, "This is a day I have been looking forward to for 2.5 years. Every once in a while, a revolutionary product comes along that changes everything. Apple has been very fortunate. It has been able to introduce a few of these into the world. Today, we are introducing 3 revolutionary products of this class. The first one is a widescreen iPod with touch controls. The second is a revolutionary mobile phone. And the third is a breakthrough internet communications device." He repeated those 3 things. The audience guessed he was announcing 3 separate devices. Then he smiled. These are not 3 separate devices. This is one device, and we are calling it iPhone. The audience went absolutely wild, and so did the world. The first iPhone launched on June 29, 2007, at a price of $499 for the 4GB model and $599 for the 8GB model. The lines outside Apple stores wrapped around entire city blocks. Apple sold 1 million iPhones in just 74 days, 6 million units total in the first year, which sounds modest by today's standards, but remember, the smartphone market barely existed. Then, in July 2008, Apple launched the App Store. This was perhaps the single greatest business decision in corporate history. Developers could now build applications for the iPhone and sell them through Apple's marketplace, with Apple taking 30% of every transaction, every subscription, every in-app purchase. The App Store did $500 million in revenue in its first 6 months. Today, it processes over $100 billion in transactions annually. Apple keeps roughly $30 billion of that every year from an App Store. Apple stock crossed $100 in 2007. Market cap hit $150 billion. The world's most beloved tech company was about to become the world's most valuable company. On January 27, 2010, Steve Jobs sat down in a leather chair on a stage in San Francisco and picked up a device the size of a large book. "What is iPhone plus MacBook?" he asked the audience. "iPad." The audience cheered. The iPad launched at $499 and sold 300,000 units on its very first day, 3 million units in 80 days. It created an entirely new product category, the tablet computer, and Apple dominated it. But 2010 and 2011 brought a shadow over Apple's triumphs. Steve Jobs had been fighting pancreatic cancer since 2003. He had taken multiple medical leaves. On October 5, 2011, just one day after Apple unveiled the iPhone 4S, Steve Jobs passed away at the age of 56. The world mourned. People left flowers outside Apple stores in every city on Earth. The question everyone was asking, could Apple survive without its visionary founder? Tim Cook, who had been Apple's chief operating officer and who had already been running day-to-day operations, became CEO. Many analysts predicted Apple would slowly decline without Jobs. They were spectacularly wrong. Under Tim Cook, Apple launched the iPhone 5, the iPhone 6, which introduced the large screen format the market had been demanding, the Apple Watch in 2015, and critically, it began transforming its business model. Cook understood something profound. Apple's real competitive advantage was not just hardware, it was the ecosystem of software and services that locked hundreds of millions of customers in permanently. Apple launched Apple Pay in 2014, Apple Music in 2015. The App Store kept growing. iCloud subscriptions were growing. In fiscal year 2017, Apple's services division generated $29.9 billion in revenue. This was not a side business anymore. This was the future of Apple. On August 2, 2018, Apple became the first publicly traded company in United States history to reach a market capitalization of $1 trillion. The stock closed at $207.39 that day. 1 trillion, a number so large it is almost impossible to comprehend. When Apple crossed 1 trillion, most of Wall Street thought that was the ceiling. It was not even close to the ceiling. By January 2020, Apple hit $2 trillion in market cap, doubling in less than 2 years. By August 2020, during a global pandemic when the world economy was collapsing, Apple crossed $2 trillion and was briefly the most valuable company on Earth. Then, in January 2022, Apple became the first company ever to reach $3 trillion. $3 trillion. How? Let's look at the real numbers. In Apple's fiscal year 2024, the company generated $391 billion in total revenue. The iPhone alone brought in $201 billion, more than the entire annual revenue of most countries in the world. Mac computers contributed $16 billion. iPad contributed $7 billion. Wearables like AirPods and Apple Watch contributed $37 billion. And the crown jewel, Apple's services division, generated $96 billion in a single year. The services business deserves its own moment. Apple Services includes the App Store, Apple Music, Apple TV+, iCloud subscriptions, Apple Pay, and licensing deals, most notably the reported $18 to $20 billion per year that Google pays Apple to remain the default search engine on Safari. Think about that. Google pays Apple approximately $20 billion every year just for the privilege of being the default search on iPhones. That's one of the most extraordinary business arrangements in modern history. Apple's net income in fiscal year 2024 was $93.7 billion. That means Apple made over $250 million in profit every single day. On weekends, on holidays, while you were sleeping, Apple is making money every second of every day. Apple has also executed the largest share buyback program in corporate history. Since Tim Cook launched the Capital Return Program in 2012, Apple has repurchased over $690 billion worth of its own stock. By buying back shares, Apple reduces the number of shares outstanding, which means each remaining share is worth more. This has been an extraordinary wealth creation engine for long-term Apple shareholders. As of March 2026, Apple stock trades at approximately $250 per share, adjusted for multiple stock splits over the years. If you had invested just $1,000 in Apple on the day of its IPO in December 1980 at $22 per share and had the discipline to never sell, that $1,000 investment would be worth approximately $1,600,000 today. The power of compounding, the power of patience. Now, no great story comes without challenges, and Apple in 2025 and 2026 faces some real ones that every investor must understand. First, China. Apple generates approximately 18% of its total revenue from Greater China, and geopolitical tensions between the United States and China have created enormous uncertainty. In 2023, the Chinese government banned the use of iPhones by government employees. Several Chinese phone manufacturers, Huawei in particular, launched compelling competitors. Apple's China revenue declined for 2 consecutive quarters in 2024, raising investor concerns. Second, regulatory pressure. The European Union's Digital Markets Act has forced Apple to allow third-party app stores on iPhones in Europe for the first time ever. This directly threatens Apple's 30% commission model, the engine that powers the App Store's profits. In the United States, the Department of Justice filed an antitrust lawsuit against Apple in March 2024, alleging it illegally monopolized the smartphone market. These legal battles could reshape Apple's business model over the next decade. Third, iPhone growth. After 16 years of dominance, iPhone sales growth has slowed. The global smartphone market is largely saturated. Most people who want a smartphone already have one. Apple's challenge is convincing users to upgrade their existing iPhones, which keeps getting harder as each new model offers more incremental improvements. But here's why Apple bulls remain incredibly excited. In 2024, Apple announced Apple Intelligence, its artificial intelligence platform built directly into iPhones, Macs, and iPads with the A18 and M series chips. Apple Intelligence includes a supercharged Siri that can understand context, write emails for you, summarize your notifications, generate images, and integrate with third-party apps in ways previously impossible. Apple partnered with OpenAI to bring ChatGPT capabilities directly into its operating system for free, without any additional subscription. The reason this matters financially is enormous. Apple Intelligence is driving what Wall Street is calling the iPhone upgrade supercycle. Hundreds of millions of people currently own iPhones that are too old to run Apple Intelligence features. The newer chips required, A17 Pro and above, are only in the iPhone 15 Pro and later models. Analysts at Morgan Stanley, Goldman Sachs, and Wedbush Securities all project that Apple Intelligence will drive the largest iPhone upgrade cycle in 5 years, potentially selling over 240 million iPhones in fiscal year 2026 alone. And then there's the Apple Vision Pro. Launched in February 2024 at $3,499, the Apple Vision Pro is Apple's spatial computing headset, a device that blends the physical and digital worlds in a completely new way. Sales have been modest so far. Apple is not expected to ship more than 500,000 units in its first full year. But Apple is playing a long game here, just as it did with the original iPhone, the original iPad, and the original Apple Watch. Tim Cook called it the beginning of a new computing era. History suggests you should not bet against Apple when it says that. Let's bring all the financial data together in one place so you have a complete picture. Apple's total revenue for fiscal year 2024 was $391 billion. That's a company generating more than $1 billion in revenue every single day. The iPhone contributed 52% of that total, $201 billion. Services contributed 25%, $96 billion. Wearables contributed 9%, $37 billion. Mac and iPad made up the remaining 14%. Apple's gross profit margin in fiscal year 2024 was 46%, meaning for every dollar of revenue, Apple keeps 46 cents before operating expenses. For the services division alone, the gross margin is over 73%. That's extraordinarily profitable. Software and subscriptions are almost pure profit once the infrastructure is built. Apple's net income in fiscal year 2024 was $93.7 billion. Its free cash flow, the actual cash generated after all investments and expenses, was $108 billion. Apple holds approximately $67 billion in cash and marketable securities on its balance sheet, giving it a financial fortress that allows it to weather any storm, acquire competitors, and return capital to shareholders without flinching. The stock has delivered a total return of approximately 130,000% since its IPO in 1980. In the last decade alone, from March 2016 to March 2026, Apple stock has returned approximately 940%, compared to roughly 230% for the S&P 500 index over the same period. Apple has consistently beaten the broader market over virtually every time frame. Apple has paid dividends every year since 2012, currently paying around $1 per share annually, and has increased that dividend every single year. For income investors, Apple is increasingly relevant. For growth investors, the services expansion continues to drive earnings growth above the broader market average. So, what's the real lesson of Apple's story? It's not about iPhones. It's not about Steve Jobs' black turtleneck. It's not even about the trillion-dollar market cap. The real lesson is this: great companies are built on relentless focus, the courage to make bold bets, and the discipline to say no to 1,000 things so you can say yes to the one thing that matters most. Apple said no to 340 products when Jobs came back in 1997. They said yes to the iMac. They said no to being just a computer company. They said yes to music. They said no to making a cheap phone to compete on price. They said yes to making the most desirable phone on earth, regardless of cost. And when Steve Jobs was gone, Tim Cook didn't try to be Steve Jobs. He built something different, a machine of operational excellence, financial engineering, and ecosystem deepening that has made Apple arguably more durable and more profitable than it ever was under its founder. Apple is not a perfect company. It faces real regulatory threats, real competition, and real questions about its next decade of growth. No investment is without risk. And as I always say on Mano Invest, please do your own research and consult a qualified financial advisor before making any investment decisions. But as a study in business, in finance, in strategy, and in the sheer power of human creativity and persistence, Apple Incorporated is unmatched. From a garage in Los Altos to 90 days from bankruptcy to $3.8 trillion, the greatest comeback in the history of capitalism. This is Mano from Mano Invest. If you found this video valuable, please hit that like button. It genuinely helps this channel grow. Subscribe if you're new. We cover the financial history of the greatest companies every day. Drop a comment below and tell me what Apple product changed your life the most. I read every single comment. And remember, in investing, as in life, the people who win are the ones who are patient enough to let great things grow. I'll see you in the next video.